for more on the New York Stock Exchange halting and what's in store for Wall Street in general. We're joined by John Allison, the CEO of asset management firm Unio Capital. John, thanks again for joining us.
Thank you. Nice to be here.
John, a very exciting day. What is going on? We've got Greek markets halting. We've got over 1,000 Chinese stocks halting. And then just to throw a little bit of extra fun into the mix, we have the New York Stock Exchange halting for about 4 hours today. Right. Let's start off with the New York Stock Exchange. What's your take? What the heck happened?
Well, first of all, it's very understandable people are worried about cyber threats. In fact, our firm is very concerned about it, considers it a very important risk. So it's certainly an understandable framework to have. Also, things happen that actually feed the conspiracy theories. We have a partner at our firm who follows Twitter Finance. And on Twitter Finance today was a tweet from North Korea, or at least apparently from North Korea, it's hard to say, in which they claimed responsibility for this thing. So that's the kind of thing that can spread, conspiracy theories. That said, we have certain experts we deal with. They all think it's highly unlikely that this was anything more than an internal technical glitch. And I personally have some experience just this week with a major bank which was upgrading a system that had a technical glitch. So our overall take is that this actually is just technology is tough, and sometimes you have these bad days.
Right, we become very reliant on technology, and sometimes it lets us down. And interesting to see that some people from North Korea are taking credit for
exactly.
this.
You never know what's going to happen. Yeah.
Well, John, given the New York Stock Exchange halting, given the Greek crisis, which is going on and on and on, and of course the meltdown in the Chinese markets, U.S. stock indices closed less than 2% down.
Right.
Would you expect more of a significant drop?
Well, first of all, yes, a more significant drop, but I want to mention something here. Markets have gone down at the source of problems. For example, as you know, Shanghai is down 38% from its high. The DAX in Germany is down 14% from its high. The U.S. is only down 4% from its high, and I think the reason for that is the U.S. has been looking out at the world, out at China, and saying, this isn't really our problem, looking out at Greece and saying, this isn't really going to be a big deal. And I think for the first time today, the confluence of China and Greece is finally beginning to hit the U.S., and particularly China, because it's such a growth engine of the world, and people are beginning to link the stock market issues there with possible slowdown in Chinese growth.
Before we get into the big macro picture, what was interesting was that volume, despite all of this, was not significantly lower. Is that because there are just so many other platforms and the New York Stock Exchange is not that relevant, given that it's basically a TV studio these days with very few floor traders being operational?
Yes, I think you're right. It's not that relevant. Let me give an example I think would put it in perspective. 75 years ago, if you wanted to buy clothing, you'd have to go to a department store. 50 years ago, you could go to Kmart, Walmart, right, Target. And then you had specialty boutiques. The New York Stock Exchange has now become a specialty boutique. It used to be the department store, used to be Macy's. It's now a specialty boutique. And, you have so many other exchanges. I watched from 11:32 when this stopped, and there was complete smoothness in the markets, just for the reasons you say, because it's a very diversified platform around the world, which is a good thing, actually.
Well, John, we also heard from the Fed today. And the Fed minutes are saying that they are now keeping an eye on China, keeping an eye on Greece, and acknowledging that these bigger issues globally are definitely going to impact them. Fed rate hike 2015, not going to happen.
I think I used to say it was going to happen. I'd say now it's less likely to happen, probably going to happen in 2016. The Fed minutes were actually dovish. I think the Fed is really on red alert in terms of, promoting anything that could possibly slow things down. So I would say because of these events, it's nothing more than that. The likelihood of a rate hike being delayed until next year is over 50%.
John, I really want to take the focus back to China. Yeah. Shanghai Composite, as we say, down about 30% from its high. It had gained around 150% over the last 12 months. Authorities are throwing everything but the kitchen sink trying to fix this, stopping IPOs, restrictions on some selling, injecting $19 billion in terms of stock buying. How is the China market drop impacting the U.S.?
I think, as I said earlier, I think the U.S. didn't think it was really anything but a Chinese problem. I think the U.S. is now looking at this and saying, China is trying to reposition its economy from being more debt-driven to more equity-driven. So therefore, the IPOs and the Shanghai market are very important for China promoting all sorts of entrepreneurial companies. And if that is starting to fade because of these issues, then perhaps this transition to a new platform for growth is actually going to be more difficult. And so the U.S. is now looking and wondering, is China growth going to therefore slow down a lot more rapidly because of the fact that the stock market is not as robust a platform as everybody thought a few months ago? So I think in that sense, it's actually beginning to really hit people here that China, which is really key to world growth, is in fact may have an issue there.
John, the Dow and the S&P have erased their gains for the year. They're in the red. What can turn it around?
I think, first of all, the Fed becoming, the Fed has been the elixir for the markets. If the Fed just comes out and says, we're going to delay interest rate, that certainly could help. I think we're going to go through a bad earnings season this quarter, but everybody expects that. So as we start focusing on 2016 earnings, I think that will also help the market. And I think fundamentally, two other things will help. Number one, just getting the European issue out of the way. This Greek thing is like a bad fever. We think the probabilities, regrettably, are very high that Greece is going to leave the euro. We hope it doesn't happen, and it's possible. But just the fact that there's going to be some certainty, despite the difficulties for Greece, I think will be an issue. And then the real conundrum is China. Is something going to happen with those markets where they will actually start clearing and start stabilizing? I think that will be. So those are the things, I think, in that order that are going to drive the S&P.
There's a lot of uncertainty out there, John, and markets and investors do not like uncertainty. One thing to keep in mind, though, was that Chinese regulators have taken new measures to stop the market free fall. Investors holding stakes of more than 5% are not allowed to sell shares in the next 6 months. We're going to have more on that later in the show with our reporter live in Shanghai. Thank you so much. John Allison, CEO of asset management firm Unio Capital.